This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Coming out of a long Christmas weekend, we are all cheered up. We're looking forward to the next round of holidays. I mean, actually, it feels like one long set of holidays as we wrap up 2023. It's always like that, the best part of the year. You're with us here on Bazaar Morning Call. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues, Reema and Surabhi. Guys, hi, morning.
Hi, let's welcome Surabhi back, the newlywed. I'm not going to say Upadhyay Kataria, but welcome back. It's good to see you.
Thank you so much.
Congratulations once again.
Thank you very much. And, thank you for being a part of the special occasion as well. Good to be back. A short break. And wow, what a rally you guys have enjoyed while I was away. What a last 3 weeks it's been.
Absolutely. And welcome back, Surabhi. And, join the club, as they say. Every day in the morning, I put out a tweet called What Happened Overnight. And I was thinking this morning as I was coming, and I said, well, what's happened overnight is that one set of anchors have come back, and another set has sort of disappeared. I'm still here. So, but anyway, we'll change that.
2024.
Yeah. So it's been incredible, right? Last, 2 weeks, 3 weeks, actually 2 weeks, because last week was not that incredible because the market kind of plateaued a little bit. It did not do very much. Let's actually pick up from where we left off 3 days back, because yesterday was a holiday. On Friday, and of course the last week. So we had a negative weekly close for the market, for the Nifty, after 7 straight weeks of gains, right? So it had been a one-way kind of a move, and that changed last week. I mean, the cuts were not very large. I mean, the Nifty was down about 0.6%. The Bank Nifty was down about 1.5%. But the fact is, the upward momentum, which started with that, the Saturday verdict on state election results, Sunday verdict, sorry, with state election results coming through, which started, and then there was the Fed pivot the week after, that halted last week. Now, I think it's pretty clear the mood remains bullish, not just because markets have been doing well, because it's also, as I said, the best part of the year. But I think there is also increasing acknowledgement that the run-up has also been very, very sharp, especially the last 1,000 points. So if you take a look at it, in the last 3 weeks, which is basically from the state election results, the Nifty has gained 1,100 points. And almost 2,500 points if you sort of go back, say, about, 8 weeks or so. So this would be the 8th week. So it's been sharp, and it's become sharper in the last 2-3 weeks or so. In any case, let's just quickly tell you about U.S. markets, because, I mean, there's not very much really in terms of takeaway. The NASDAQ was up a little bit on Friday. The 10-year is still at about 3.9%, under 4%, and the dollar index came under pressure, and we are at about 101.7, so comfortably under the 102 levels. Financial conditions have greatly eased with that sort of Fed pivot. People are still arguing whether we should read it as Fed pivot or not. But of course, we heard from Fed Chair Powell talking about how rate cuts are coming into view. That's really changed the global mood. I just want to say one thing. As we get deeper, and this happens every year, as we get deeper into the end of the year, and this is literally the last week before we close 2023 out, volumes thin out, and moves don't necessarily need to make a lot of sense. So don't try and read too much into day-to-day kind of price action, because volumes, not just in index futures but single stocks, etc., also starts to sort of thin out, and moves will look exaggerated. It's not sort of something special this year. It happens every year. Just a few other things. The dash for cash continues, which is basically IPOs, a long list of issuances, QIPs, share sales. I'm calling it dash for cash because, I mean, the market is so buoyant. Everybody wants a piece of the action. Stocks which have done well, promoters cashing out a little bit, old investors, private equity, and that's been a constant theme through 2023. Just on the F&O side, FIIs are now long 85,000 contracts in index futures. And, we said this last week, I think on Thursday, when we first started putting this number out. It is at a bit of an extreme. When the Nifty topped out in July of 2023, we got to almost 1 lakh index contracts long. So it basically tells you that there is no comfort and everyone is on one side of the trade. So FIIs are long at an extreme. Clients are actually short. When I say clients, I mean non-institutional, largely local HNIs, etc. And it's always played out one way, that markets kind of start to look to pull back a little bit, consolidate a little bit when we get to these kind of levels. Now, just circling back to levels on the upside, the levels to cross are 21,357. That's a 61.8% retracement of the Thursday to Friday, actually the Wednesday high to the Thursday low. And then, of course, the all-time high, which sits at 21,593. Near-term support levels are the swing low, which is 20,976. And I mean, I think it's always advisable not to chase the market higher, but to buy at reasonably lower levels, buy the dips if you're trading. And then, of course, there's a 20-day moving average, which comes in at 20,831. This is closest to where we left off on Friday. Nifty Bank, it nearly retraced almost all of the fall, Wednesday, Thursday fall. So it retraced 78.6% of the recent decline, but then saw selling pressure. So that automatically becomes something the index needs to cross on the way up. And then, of course, it's the high, which is the Friday's high, which is 48,071. And support for the Bank Nifty comes in at the 20-day moving average, which is 46,589. The GIFT Nifty will come up on your screen. As I said, don't chase moves higher. If you're trading and you compulsively want to position in, it's always advisable to stay with the trend. The trend is up, but do it on dips. And the more meaningful the dips, the better in terms of risk reward. Guys.
Okay, so GIFT doesn't have too much company, right? Not too many markets are trading today, even in Asia. Forget what's happening in the West. But just to add to the point that Prashant made, I think we've just had that string of good news continue on Wall Street as well. As we have got into the long weekend, there was more good news on inflation, for instance, coming. It's just quickly putting the numbers out there. By the way, the rally is now 8 weeks and counting on Wall Street, the key indices, the Dow, the S&P 500 and the NASDAQ. Now, the inflation picture, so the PCE, which is the Fed's preferred gauge, that continued to show a very green picture in terms of moderation in inflation. The November headline PCE is up about 2.6%, so it's below the 3% handle. It actually fell 0.1% month on month. And if you're looking at core PCE, then it was up about 3.2%, and the rise month on month was just barely anything, 0.1%. So inflation continues to trend lower, and that reflected in the way asset classes are moving. You've got the dollar sitting at a 5-month low, 101.5 thereabouts. That was a big move on the dollar. And then you've got the US 10-year yield, which is below the 4% handle. So, that Goldilocks scenario continues to play out. The only worry for the market, in the last couple of days has been oil. And we saw a bit of that play out on Friday as well. The, net rise for the week gone by is about 3% on Brent. So let's see, we're still quoting closer to 80 on that particular contract. Finally, over here, I'll also watch out for IT stocks and look for more cues from REMA. Because one big news that we got was from Infosys. They have seen a cancellation of what would have been a potential big deal, about $105 billion on the AI front. So let's see how that plays out. The flows picture, we did have a big net sell on Friday, almost 3,000 crores of net sell from the FPI community. But then domestic institutions are buying, so net it's fine. But if you look at flows, in totality, and this is I'm talking about final data, not provisional, final data from depositories, and that number really explains the December rally. Look at the massive surge. It's the highest flow that we've got so far this year, almost 58,000 crore rupees. And that explains what December has done. I mean, we're up 6% on the Nifty, about 5.5% on the mid-cap index, 4.5% on the small-cap index. So it's been green, and only green, Rima.
Well, but heading into the year-end holiday and the festive season, things are very quiet on the Asian market front, right? You've got the Kospi, which is absolutely flat. Taiwan is up in the green, up about 0.5%, but the Chinese markets are down close to about 0.5%. There are many markets shut today. In Asia, you've got Hong Kong, Australia, New Zealand, UK. Market will be shut later in the afternoon. About the GIFT Nifty, it's suggesting a very muted start to begin trade with, but I'll watch for banks and IT. If you remember on Friday, while rest of the indices were up, the banking index was down 0.7%. And today, potentially, you've got bad news on IT stocks, both Infi and Wipro. Wipro, remember, was up 6.5% on Friday on rumors on some management change, and that spurred the stock higher. But there is a clarification. So if Wipro retreats, plus Infi could be under pressure because of that MOU cancellation, then you've got IT weak, and watch out for banks because banks underperformed. And these are the two big indices for our markets. So we'll watch out for how, this impacts markets in today's trade. Prashant spoke about that dash for cash. Well, we've got 3 big listings today. Muthoot Microfinance, Suraj Estate Developers, and Moti Sons Jewelers. Amongst them, it's Moti Sons Jewelers, which has seen a very strong subscription of 160 times. And if you remember, even the prior gold or the jewelry retailers like Vaibhav Gem, Senco, when they listed this year, had seen very strong, demand and a good listing pop. But later this week, tomorrow, you've got Happy Forging, RBZ Jewelers, Credo Bands, Credo Brands Marketing, the owners of Mufti, on Thursday, Azad Engineering, and on Friday, Innova CapTap. And not to forget, you've got the December F&O expiry as well that we will be tracking on Thursday. So these are some cues to begin trade with. But let's get to some calls then, equity market calls.
Oh, absolutely. And it's reassuring that the calls are still coming, right? People are still writing those.
Not everybody's on leave.
So Andrew Hollenhorst of Citi, who's the economist at Citi, says that the Federal Reserve has aggressively changed its rhetoric to engineer a significant easing of financial conditions. Their base case involves a recession around the middle of 2024, but the probability of a downturn is reduced by the unexpected stimulus from looser financial conditions. The cost is a more extended period of inflation running above 2%, which Fed officials seem increasingly willing to accept.
All right, let's get to some money market views then on the rupee. Abhishek Goenka of IFA Global says the market is pricing in a 93% chance of a rate cut by the Fed in March. Now that even the PCE, Fed's preferred inflation gauge, has come in lower than expected, upbeat investor sentiment has resulted in the highest monthly FPI inflow into Indian debt and equities in 3 years, aggregating to $8.7 billion. RBI continues to absorb flows aggressively, which is reflected in forex reserves, which have risen to $616 billion in the week ending 15th December. As a result, any strength in the rupee is proving to be short-lived. Implied volatility continues to remain extremely suppressed. He expects the currency to trade in a range of 82.90 to 83.50 over the medium term.
Well, on bonds, Ajay Manglonia of JM Financial says in absence of any major cues in domestic market, rates market remains steady and in a narrow band with low volumes. Optimism is building around a Fed rate cut early next year. He expects the 10-year benchmark yield to trade in a range of between 7.16 to 7.21%.